Hey, what's up you guys? Today's video is going to be the steps that I would know, or someone would told me that I was supposed to be taking before I would buy my first house. Now, obviously the first thing is to determine the market. You have to know where are you buying, and it's not just the location that has a better schools or that is centrally located, that's close to the beach. You have to know specifically how that specific location is different from the current, that wherever you're living. Is the crime lower? Is the better area? There are different factors that go into this, but generally speaking, I think personally my advice is to know the area. If you've been living in a certain county, certain city for like a year or two, you would understand which areas are good for the home purchase and which areas are not really good. Determine your market and move on from there. So another thing, it would be determining why you want the house. Are you making a new family? Are you finding a job, moving to closer to your job? You need investment property to cash flow, or you need to just write off the taxes. If you don't know, you can use the strategy when buying the house. It's called cost segregation study. Engineers that pretty much calculate whatever amount of the goods and materials worth in the house that you got, and then you can write them off from federal taxes, not state taxes. Some the states might allow it, but unfortunately where we live, California, that doesn't allow it, so you would pretty much still need to pay the California tax. Number 3, and this is, I would say this move is a crucial, get approved. What I mean by getting approved, you need to get a letter from the lender. Personally, I advise to all my clients to go to mortgage brokers, because they can shop and give you much better rates than any bank would give. Banks pretty much, they don't really care. They have rates, you buy them. No, you won't buy them, someone else will come buy them. So they don't really care how good the rates are. However, mortgage brokers can go to like a 20, 40, 50 different lenders, find you a better rate, and then if you know the broker, if they are reliable, they would pretty much guarantee you that they will close. I personally felt to one of the online brokerages, one of the biggest online brokerages. They gave me an unbelievable low rate, and 3-4 days before closing, they just told me they would not be able to close. They didn't really care. They got a bunch of clients. So that's why I advise to go to the people you know, because if you would not close, you would probably lose your down payment that you put for the house with the offer, and most probably you would lose the house, which is horrible. So you're losing your time, you're losing your money, but also you're losing the house you bet on. That's really important. And if you know that your credit score is not really good, personally I would strongly advise to go and fix it first, to close whatever loans you have. And there are companies which can help you. Just Google them, and only then go get a proof roll, because if your credit score is low, most probably you would not get the best rates that you could get. Other step is to do proper financial planning. What I mean by this is, most probably your mortgage would be a little bit higher, especially with the current rates, than your current rent. Obviously, rent, it pretty much goes to the landlord's pocket. You lose money by paying rent, which with mortgage you would not lose money. And there's another little trick there. Eventually, mortgage will be costing you much lower than the rent will be, because mortgage is pretty much you are paying your own house, while rent is just whatever the market determines that is okay for the certain property in certain area to be paid, which is up to landlord to decide. And statistically, rent always grows up. I predict current rents to be probably ×2 in the next 5-10 years maybe. However, mortgage, more you pay it, more it will go down, unless you will refinance. The property prices, they go up, but your loan is still the same. So if you didn't lose me there, the amount that you were supposed to pay will stay the same, while the property price will go up. So pretty much, say you got the house in 2020 for 600,000, you're paying somewhere around 3,000 for 3-bedroom 2-bathroom property, which rent in that area already in 2024 is somewhere around 4,000. I'm talking about Orange County, obviously. So pretty much you will eventually win in the long term. But you have to do financial planning to be prepared to pay whatever the mortgage amount would be. You have to have funds for that, so that you would not be caught up, hey, I don't have money, I'm ready to pay like 3,000 bucks a month and your mortgage is 4,000. Obviously you would end up losing your property. So you have to have some funds, do the proper planning, have some kind of certain cash flow to count on, so you would not go bankrupt, my friends. That's not a good thing to do. Another step I would say is to find a good realtor. Why I'm saying a realtor, not the house, because a good realtor is able to bring you off-market deals. For instance, I have at least 100 off-market deals right now that you would not see in Zillow, you would not see them on Redfin, you would not see them anywhere. It's pretty much my own clients that I built up over the years that I know those guys would be selling. Those deals are lower than market price. So if you find the right realtor, and by the way, if you're in Orange County, I would love to help you guys. Just leave the comment, my team will get back to you, or I will meet you myself personally. And in this crazy market, trust me, it's really hard to get good deals, but we're getting good deals.
Thank you for watching, and I would like to mention that this video is sponsored by my company. We help landlords to maximize their rental income. Normally, we take the property, say it's been rented for $3,000. We'll help landlord to make about $5,000 and charge about 10% from the profits. This is what we do. If you guys interested, if you're a landlord and looking for that company that would help you with getting more rent, just letting you guys know, I'm also a realtor in California. Any part of California you're looking for real estate, property for yourself, live with a family, or for investment, I'm your guy. Feel free to hit me up in the DM.
Finding a good realtor eventually will bring you a good house. Obviously, next step would be to do the offer on the house. Now, there are a couple tricks, especially in the places like Orange County where the demand is much higher than the market can offer. I would personally not try to lowball. Now, I had a client about a month ago. We did, I want to say, somewhere around 10, 15, maybe close to 20 offers, and none of those offers went through. So I was wondering, why is this happening? Okay, we made like a full price offers, we made cash offers. Every time someone would come and beat us. The problem with that specific buyer was that he was trying to undercut the seller, and it's not a good feeling. I mean, just put yourself in the seller's shoes. Like, if you have the property, you get 10 offers are being over asking, you would not even consider the offer that is below the asking price. Don't try to, it's still a seller's market, it's not buyer market yet. Don't try to undercut people, don't try to be a smartass, just go with the flow. Do higher offer. Eventually, if your offer was really higher than market, you would be able to go lower it in a manner of time. Don't rush the things if you really want your offer to be accepted, because it's pretty much you're going to waste your time, your energy, the agent is going to waste your time, and most of the time agents just give up on this type of clients. So probably they will just stop answering your phone. My strategy is to never go low. Of course, you have to do the research. You don't want to do the higher than asking price for the property that no one wants, and then start to negotiate. First of all, you need to do an inspection, good inspection, proper inspection. If the house is not new, even in new houses, you can find so much stuff that was not built up to code, that was built wrongly. You would be able to lower the price. For instance, in the house that I bought myself, we had issues with mold, we had issues with insulation, we had issues with insulation of the ventilation that was asbestos. I had to eventually remove it, and it all costs money, guys. It's nothing free. So pretty much good inspection would be able to lower your price at least for 20, 30, maybe sometimes in 50K. Doing a good appraisal, that's why I'm saying to have a good mortgage broker, so that they would know which appraiser they're hiring. So you can get a crazy appraisal, say the house is listed for 6,000, an appraisal will come, he have no experience, the bank hired him, and he will say, yeah, this, I think it costs like 800,000. Now the situation is you would have to pay 800 for the house that costs 600,000. So all the things matter: appraiser, inspection. Never rush the process and close the deal. If you do everything right, you will be able to close the deal, which is normally about 1 month, and eventually you would be able to move. Make sure to make any repairs you need before moving into the place, because after you would move, that would be just a headache, especially if you have a family and kids. You would constantly get complaints from your wife. You don't want to do this after you will move. Definitely have to do repairs before you move. And personally, by default, if you're buying the house that was built 50-40 years ago, not renovated, built, just make sure to check the mold, make sure to check the insulation, energy efficiency, because most of those houses were built with asbestos, with at least sometimes with no insulation at all, and it's going to cost you crazy amounts Doesn't matter what climate you live in, hot it's going to be AC, cold it's going to be gas heater, if there is no insulation. It happened to me. I replaced the insulation, and whenever there was no insulation, we were just freeze in the winter. We pretty much, it felt like we live in an oven in the summertime. So everything matters. Take your time, do your proper homework, and then just start to moving. Meet the neighbors. I would personally definitely advise to go see the neighbors. For instance, I had a house where the whole neighborhood, all the houses were over the $1 million. However, there was no single house that had no rats inside. Can you imagine? That's just crazy. And there were people like they're living in $1 million houses, but all of them have rats inside. Obviously, no one would like to live in the property like this. Lastly, but not least, I would check the area. If there is a possibility to build an ADU, if you don't know what's ADU, also known as casita, additional dwelling unit, it's pretty much a small house that you could rent separately from your main house, which is not bad. It's going to make you proper cash flow. You can rent it short term, make almost all mortgage, and live for free. By the way, I'm going to make a video about it, so stay tuned and subscribe to the channel if you haven't subscribed yet. In future, I definitely advise to use appreciation. I can guarantee you that your house, doesn't matter where you buy it, what the condition is, it will go up in price. Overall statistic is that every property doubles in price every 10 years. So let's say you buy your house for 700,000, 10 years pass, and now this house would be worth somewhere around 1.4, 1.5 maybe if you got a good deal, and you would be able to cash out from that price. That's tax-free money. You just go get a new loan, close the old loan. While if you have a good rate, you would be able to keep your payments to close whatever you're paying right now. Keep in mind that by the time you will be refinancing after 10 years, the average rate on the price that you have would be double of what you're paying for your mortgage. So you're winning with paying a lower mortgage, and you're winning getting back pretty much free money, whatever the amount you would want to cash out, or you can close. But just so you guys know, even if you close your loan, you're not going to live free. You have to pay the property taxes. Pretty much the word tenant is in every contract. Even if you own your house, you're still considered a tenant, because there is a couple laws like eminent domain. If the government needs to build a railroad, they can just ask you out, pay you out, and move you from that property. So you pretty much, quote unquote, never own your own property. That's why lastly, I would advise not to get emotionally attached to any house. Happened to me, my first property that I managed, I used to rent it to the students, and I get mad like every time something is wrong with like a carpet, there's a spot on the carpet, I take it personal because I'm the responsible person for that property. But eventually I understood that it's just material stuff. You don't need to care about that. I mean, you need to care about that, but you don't need to get nervous about it. Live in the property. When you get a better chance, you have money, buy a better property. Take your time. Just make sure to buy property, because if you don't buy now, tomorrow is going to be even more expensive. I hope this video was useful for you. Feel free to DM me with any questions regarding real estate, and see you on the next one.